signals. Have you seen any change?
Yeah, just to clarify, our concern was that we were echoing concerns expressed by some of the private sector and foreign community that they had passed on to us, and we were worried that if they have these perceptions, then that might slow investment. I think that's still the case. You know, there are areas where the government is very much aware of the situation, and I think they're trying to take steps to alleviate those perceptions.
And also, in one of your earlier visits, you said that discussions were ongoing with the central bank to probably look at another alternative method of targeting inflation. Any developments?
Yeah, the central bank has been moving away from a framework that targets reserve money alone towards, they've been developing within their own staff a more nuanced, nimble, I would say, inflation forecasting framework. That work still continues, and I think it's a very positive step because it would allow the central bank to respond to more subtle and volatile variations in money velocity, to get a little bit technical. But I think the central bank continues to do work in that area internally, and I think it's a very good initiative.
I think you forecast FDIs for this year somewhere in the range of 900 million. What kind of progress are we making on the FDI front?
To date, FDI inflows have been what? Little over 400 million. I think the 900 million is achievable, but we'll see how things develop over the next 4 months. At this point, I think the growth in the economy is pretty solid across both domestic demand and external demand. I mean, for Sri Lanka specific exports, there are some concerns about competitiveness in some sectors, but I think overall the growth in the economy is broad-based, and I think it's resilient to any small changes in some of the macro variables. Any growth in the export? Growth, yeah. Growth in the export sector, you asked. Well, overall, tea has been growing well because of favorable prices. Garments have held up quite well. So overall, the export sector, I would say, compared to 6 months ago, has surprised us on the upside. It's been somewhat stronger than we had expected, I would say, 6 months ago.
You have referred to foreign exchange sales by the central bank, where you say this policy does not seem to be in line with the current fundamentals of the economy. Could you elaborate, please?
Yeah, I think our view there is that if there's some change in our outlook for the balance of payments in 2012, then we would see if there's some improvement, we would see the need for the central bank to sell foreign exchange into the market recede. And at the moment, based on our current projections, we're expecting that there would need to be either continued sales or more exchange rate flexibility. But as I said, it's really contingent on how things develop in the external sector over the next year. FDI and remittances and things all play into these considerations.
Thank you.
Well, as I mentioned, we had a round of discussions on this mission. We will go back to Washington and we'll continue to monitor developments over the next several weeks, and we'll have another opportunity to continue discussions during the September annual meetings, and we'll see what sort of progress we make there. We haven't, usually on the review missions, we don't complete until the date in which we go to the board. So in that sense, you know, we still have, the review is still ongoing, I would say. Thank you very much for coming again, and I hope to see you when we return in a few months' time.